Morning all, I'm James. It's Monday. Let's talk about natural gas. I thought we'd have a lot more to talk about actually. When we look at the charts, we can see that natural gas keeps moving up as we want it to do, but there's not a lot to add technically. We'll come back to the charts in a minute. Let's see if there's any news that we can look at, including the COT report. As I said in the Sunday night live stream, the COT report's not giving us much info at the moment because it's a bit slow moving. It's outdated. It's several days old now already. And the massive moves in the energy market, which is a complicated market, not just futures but options and spot moves as well, and all sorts of deals being made during this period at war. So this doesn't really give us much information, but let's have a look at what we've got anyway. Commercials roughly balanced, 563 long, 412 short, and adding roughly about the same to each side. Producers 232 long, 259, so also balanced and adding equal amounts to the long and the short side, same as managed money, 180 long, 277, a bit more short, but adding just a little bit to each side. And then other reportables, retail traders, etc., 52 long, 121 short. So angling to the short side, but these are quite small volumes for the retail traders compared to the rest of it. Natural gas weather for the period ending on Wednesday has this to say: cooler than normal weather systems will track across the Midwest, Ohio Valley, and northeast with showers and highs of 50s, 60s, lows of upper 20s and 30s, including advancing cooling air into Texas. The western US will be nice and warm, blah, blah, blah. So pretty moderate. As you can see from the map, just a swathe of red drifting across from left to right. I don't subscribe to natural gas weather anymore. I rely upon posts on X for weather reports, so I suggest you go and do the same. But if you are a subscriber to NatGas Weather, you might be able to get some more info. And then going across to NatGas Intel, just looking at the stories of the day. Futures settle, why traders trap breaks on NYMEX, natural gas price rally. A little bit of a thought about the rally on Friday last week, continuing today. And looking at some of the news, spot prices wrap up. Physical natural gas loses steam as demand picture darkens. I'm not too sure about that. Midday snapshot, cash natural gas mostly sells off as weather tailwind dissipates. Midday futures upside fades as June natural gas stalls below T, all this sort of thing. So very weather focused at the moment and season focused. But of course, there's this underswell, which I spoke about in the live stream last night, of demand and damage to critical infrastructure and rearrangement of world energy shipping routes and supply routes and so on. And I think there's going to be more of a bid under natural gas than most people realize. Having said all that, let's have a look at the chart. And I've got two charts up here. First of all, let's look at the futures chart at Black Bull. I'm going to refer you to yesterday's live stream to have a look at this in some more detail, because I did spend quite a lot of time on natural gas. But here we go. Just to repeat briefly, we've broken above the chop zone now and critically above the 200 period moving average here on the 4-hour chart, as we've broken out of this falling wedge. We're long from pretty low down now in good profit, but I've got some losses to catch up from the previous contract, about 27 cents. We're almost there. So this is the futures contract, and I'm not in this one yet. I'm looking to buy this on dips and probably back down to the yellow chop zone and the breakout of the 200 period moving average, and that would take us down to about 278, 275, maybe 271, which was a key number that we had to break out of before. So anywhere in the mid to low 270s, I'll look to buy natural gas futures, and I'm looking for this to rally up to $3 initially, 325, 350, 375. 375 is the bottom of that weekend rollover gap that we still haven't revisited yet. That's the green line here. That's at 375, and the top of the rollover gap's at 425, and I think we've got a good chance of getting to both of them. However, this is going to take some time. As you can see, we've broken out of the wedge now, beautifully really. We bought a little prematurely at the top of the chop zone, but we had to get into the chop zone, in fact touch the bottom of it, and the way we did that was pretty sophisticated. We broke out of the wedge, tested it from the top not once but twice. The second test went lower than the first test, getting everyone short, and then bounced out, but really just retesting the top of the wedge that we broke out of, and in a beautiful breakout retest pattern, which is now launched out of the chop zone, confirming that that retest was, quite firm, quite good, and that we've now probably got some more upside ahead of us. This is the day chart. You can see the targets first of all, the underside of this channel. There's a channel line coming up there, trend line. So let's get to the underside of the trend line. And then, as I said, we've got to get through 275, right? 271, 275. That's where we are right now. We're actually above that level, but we might have to retest it from the top. And if that fails, we might go lower. But if we retest from the top, down to 275, 271, maybe 278, and bounce out of there, that'll give us even more confidence in the long direction. Going back to the 4-hour chart, you can see that big impulse breakout candle, which is really good. That took us through the 200. Very often with natural gas, we need these big candles, big, gap candles or big candles to get through critical levels. You'll often see us gapping over key levels with natural gas too. So I just want to finish off by going back to the continuous price here at Pepperstone. This is the trade that I'm still in, and I'll look to get 27 cents out of this trade. I'm already more than halfway there. So as soon as this one gets up there, let's say to the 200 period moving average on the 4-hour chart at 278, notice there's a price differential between this and the futures, and then maybe we'll get a pullback. I can then get out of this trade at break even and then look to the futures to buy on the dip when they both retrace, probably back into the low 270s, something like that. Remember, the continuous price might not retrace that much, considering it's a conglomerate price of the front month, a couple of the forward months, and the spot price. So this might not pull back quite as much, and it's also already lower than the futures price. So it's a buy on dip for me on natural gas, as I said, on the futures into the mid to low 70s. Hopefully like 271 would be great, and then a bounce out of there aiming for $3, $3.25, and then all the way up to $3.75. This will take time, and it will take seasonal and storage and weather changes to make it all happen. But I think generally the bid under natural gas is real and it's strong, and that generally we'll have higher prices on natural gas rather than lower. So take care, have a great trading day. Make sure to press the like button, the subscribe button, and the notification bell on your way out to support the channel. Thank you so much. I'll see you in the next one.
Stocks rising, markets parabolic. Bag me some cheddar, ain't no alcoholic. Charts looking sweet like a dodgy pie. Strategies tight, made a one-fly guy. Tickets on fire, pockets getting deep. Gravy boat overflowing, losing no sleep. Stop loss in place, man, I'm wrapped up good. P's and Q's proper, no misunderstood. To the moon, diamonds in me hands. Forget the fun, I'm the man with plans. Profit traders popping, no time for scams. Ride this rocket, ain't worried about the jams.